Corner. I put that question to the financial analyst, Jerry Wattenberg.
Well, I think, we've seen some extreme volatility this week. Starting into the beginning part of the week, we've had a real sell-off and then accelerated as we got closer to the U.S. holiday. I think the market is now taking a pause, and maybe a pause that refreshes for maybe a few more gains. But I think the market is extremely cautious, both out of what's going to happen with U.S. interest rates, the housing market, and now it feels a little bit more concerning about the U.K. market as well. So Europe might not be so protected against probably what the problems are in the U.S.
Let's take a step backwards, because essentially what stocks did at the time, the subprime crisis, we did see quite a big sell-off, and then actually we've had some decent gains, or had some decent gains up to about the start of this month of November. Was that kind of a false dawn? Are we actually still looking at the same old volatility, or are we still looking at the prospect of something, again, a major sell-off?
Well, I think the big thing is that after the subprime happened, many investors thought that maybe this is it, and all the information is out there, and we've seen it, and we've taken the body blow, and we're moving forward. However, with the continued news of different financial companies, disclosing more data...
But at the end of the day, I mean, it sounds like a lot of money, but if there are write-downs totaling, what, $100 billion, $200 billion, the world financial system, when you consider how much is traded every day, can take that in its stride. It's painful for the banks involved. But what's really at issue, surely, is the credit crunch, isn't it?
Well, credit is an issue because that affects really every sector of the economies, from, housing to corporate borrowing to a whole slew of things. However, the thing that's critical is consumer sentiment. So when consumers don't feel good, they will stop, purchasing, the economies will contract, and then you will really have an issue.
Okay, so let's try and look at this in global terms. I mean, clearly the U.S. consumer is at a tipping point. It's Black Friday and all the rest of it, this important shopping day. We'll talk about that later in the program. But if the U.S. consumer does tip into gloom, does that mean really that the whole global economy, which has been looking quite rosy, is also going to go into a slowdown?
Well, historically that had been the case, but I think now we're entering into a new paradigm where consumption and growth outside of the U.S., specifically in China, not so bad in Europe, certainly in emerging market economies, Russia, these might be strong enough to help the U.S. avoid a recession, and that's a new situation that we haven't seen before.
Let's look then at the dollar, because the dollar seems to be what has been taking in the chin. A little bit of a recovery on Friday, but essentially, do you see a downward trend, and where does this leave the Fed?
Well, I think the Fed's in a precarious situation because I think they're going to have to continue to cut rates, which is going to make the dollar less attractive on the international stage. Additionally, as investments get more and more volatile, there's a question whether international wealth funds are going to continue to deposit their money in the U.S. going forward, which then could also weigh on the dollar. And so you hear more about, concerns about that the U.S. is not the global currency it once was and the storehouse of value. But I think overall, the U.S. consumer has surprised everybody, even during prior times, of its ability to consume and work through difficult situations. And I think, you'll be able to see that. And so I think the dollar takes a few knocks for sure. But I think overall, we'll probably stabilize, after it gets worse, and then probably get a little bit better.